not far off the 200-day moving average of 691.76. Many saying yesterday that if broken decisively, it could prompt further weakness. The likelihood of that happening?
Good morning, Alishia. Yes, the big word there is if. We've seen the Rand breach that 200-day moving average on repeated occasions this year and fail to sustain the move. And so we wait with bated breath whether to see if momentum has indeed shifted to a more sustainable bearish trend. The catalyst for that will probably be a very disappointing US payrolls figure this afternoon. We've had a deluge of poor data out of the States, and of course, as we all know, everyone's very concerned about the global growth outlook. How long is the soft patch going to last? Are we headed in to another recession, double dip scenario? All of those negativity sentiments doing the rounds at the moment. And of course, if payrolls disappoints this afternoon, then I think it'll just aggravate those concerns, and we'll probably see emerging markets selling off a little bit more. And of course, in that would be the Rand would probably weaken as well. Complicating
matters a little bit has been that we've seen both Japan and Switzerland intervene this week to weaken their currencies, which were considered the safest in developed worlds. And what's your overall take on interventions there and the likelihood of them continuing? Because risk aversion really seems to be the name of the game right now.
It really is, and it's very difficult always to kind of stem the tide through intervention. You can do it over short periods opportunistically, but you can't sustain it for a very long period of time if that's where the market wants to go. Of course, everybody wants a weak currency in the current environment. Global growth is slow. You want your exports to remain as competitive as possible in such a fragile environment, and you know, unfortunately, everyone is gunning for the same door. So it's going to be difficult for those central banks to continuously defend their currency or lean against their appreciation.
Of course, with our local growth story weak, but in a context where we've got risk and inflationary risk prevailing, when it comes to the Rand, should we be pushing a weaker Rand?
I think obviously a weaker Rand has its pros and its cons. I think in the current environment where South Africa's GDP growth rate is far lower than a lot of its emerging market counterparts, I think that a weaker Rand would definitely help the export sector. But you know, it goes further than just the exchange rate. Of course, when one looks at competitiveness. We've also got to improve on the labour productivity front. We've got to get rid of as many strikes as we've seen this year. All those things that you know, count against your productivity and your output.
I ask because we've just seen net reserves and gross reserves figures being released by the SARB, and as expected, showing a much smaller rise in net reserves for the July period. Your overall reading of the numbers that have filtered through there?
Well, yeah, if I look at the numbers a little bit more closely, of course, in June we had that chunky FDI deal which was absorbed by the SARB, so that bolstered up reserves somewhat superficially, because if we actually looked at what the Reserve Bank accumulated, it was still around that $300 odd million on the month, and I think we've seen more or less the same in July, around $300 million bought particularly in the forward market. So they're not really changing the game too much, but needless to say, any big, large foreign direct investment flows are probably going to be absorbed by the SARB. It won't touch the spot market, so that will lean against, you know, exaggerated currency appreciation. But other than that, they will just continue to accumulate when and if market conditions allow. And we know that the Rand was very strong towards the end of July, so it made sense that they accumulate reserves. But on the month as a whole, still around $300 million worth of dollar purchases taking place by my calculations.